we believe that the greatest companies being built today will be built in response to the greatest challenges facing the United States, and sort of by proxy the world.
Welcome to Venture Voices, where we interview emerging managers within the venture ecosystem. I'm Richard Kerby, a partner at Equal Ventures, and today we have the pleasure of having Dan Teran from Gutter Capital. Dan, welcome.
Thank you. Pleasure to be here.
Yeah, looking forward to our discussion, Dan. And I know, but before we jump into the meatier stuff on the podcast, I know you aren't recording from your apartment, which is where we intended this to be. And so I know that unfortunately your building caught on fire. I'm glad to hear that you're okay. Everyone's okay, but how else do you manage it, I guess?
Yeah. So I guess like a week ago today, there was a fire in the building. We were actually up in Portland, Maine, visiting one of our portfolio CEOs, and got the call and drove straight back. And yeah, fortunately, nobody was injured. Everybody's okay, but it's definitely going to be a long road to recovery. So yeah, I'm coming at you live from the Soho Grand, where we are currently staying, trying to figure out what the next 6 months looks like.
Yeah, so you have fires in portfolio companies as well as fires on the personal side, unfortunately. But hopefully both the portfolio side and the personal side get through it there. And yeah, so I know you guys are tend to be more stealthy in nature as a firm. So it'd be great just to get a sense on, background on Gutter Capital and like just the investment philosophy that you and James operate on.
Yeah. I would say like we're not exactly stealthy by design, but we just try to focus our energy on working with the portfolio. And I think, we're by nature, and you guys know this as well, like we're early stage investors and we're a young firm. So I think a lot of the story remains to be told. And hopefully, as our companies rise in profile, our profile will rise too. And just haven't seen like a lot of value in trying to have an outsized brand as a firm until the company is, matured. Our investment philosophy is pretty straightforward. We believe that the greatest companies being built today will be built in response to the greatest challenges facing the United States, and sort of by proxy the world. And we view those as affordability for the average American, economic mobility, and climate change. Sort of all three of those problems have to be solved for the United States to persist to be a dominant force in the world and a force for good. And, we think that entrepreneurs have a great chance at solving them. They always have. And I would say the nuance to that is we are software investors. And so, my background is in building SaaS and marketplace businesses. We try to invest in mission-driven founders that are taking sort of software-driven approaches to solving those problems.
No, that's helpful context there. And I guess when thinking about those three pillars of Gutter, what does that translate into kind of the sectors that you spend the majority of your time in?
Yeah. So I think if you look at the portfolio that we built in Fund One, which is pretty much fully deployed at this point, there's kind of a few groupings. I would say one is, climate is a sort of a broad bucket. For us, we look at climate mitigation. So companies like Forerunner, which is helping communities understand their floodplain risk and manage risk in the face of a changing climate. A company called The Climate Choice, which has Scope 3 emissions management and reporting. So really using vertical software to help manage climate risk and understand changing climate. And then the other piece of climate for us is electrification. Everyone now is familiar with the Inflation Reduction Act. There's this massive economic tailwind driving a complete overhaul of sort of the operating systems of a lot of our homes, our buildings, our transportation systems. And we see a lot of opportunities, to combine my experience in managed marketplace from managed by Q to discrete opportunities around electrification. So if you look at the Fund One portfolio, companies like Treehouse doing EV charging, companies like Tetra doing heat pumps. So it's kind of like the climate bucket, where you and I have had the good fortune to overlap is sort of SMB SaaS, helping small businesses compete with big businesses. I'm sure we'll talk about Biggie. Another one there is Opus, which is training software for frontline workers. And then the other big piece of the Fund One portfolio, which, we kind of arrived at just through looking at the world around us and kind of understanding where the problems were. My partner, James, did a deep dive on the housing market about a year ago. And we decided to kind of stake a claim that even with, 30-year rates reaching record highs, we thought that there was a big opportunity to invest in any companies that could accelerate the development of housing in the United States. And so you see companies like Den, Simply Homes, and others in the portfolio that are really focused on Build costs is another one. How do we accelerate the supply of housing in the United States? So those are kind of the fund one buckets, but we try to keep a pretty open mind and sort of follow the evidence where it leads. And, there's, I would say, if you think about the themes we invest in, we're basically generalists. We just have a lens through which we look at the world.
No, that makes some sense there. We share a lot of those same pillars and principles at Equal here as well. And I guess when thinking about, the IRA in particular, I think that's been a big boon for climate fundraising, focus there, customers, revenue growth, capital there as well. How do you think about that in relation to, the political landscape, I guess, and how that may or may not change going forward?
Yeah, well, I think one thing that's interesting about the Inflation Reduction Act and sort of the way the legislation was written is, there's basically, if you look at other kind of failed federal policies, such as Medicaid expansion, where you have the ability for the states to effectively block that, the rollout of that, I think the Biden administration learned their lesson from that mistake. And so a lot of the IRA dollars, especially the rebates for things like heat pumps, home electrification, they're not really relying on the states to do anything. And I would say they're also just like much harder, I think, to politicize. And so if you actually look at the United States, where do you have the most heat pumps and induction stoves? It's actually in the Southeast, which are, red states. So I do think that, there's always some political risk, but even in a company like Forerunner, their biggest customers right now are in Florida and Texas, which you would think are on the, I think at the end of the day, where the rubber meets the road, all politics is local, and these issues are actually not as they're not as politicized as you would think when it comes to the actual practitioners on the ground who are charged with solving these problems, protecting their communities.
Yeah, that's fair. That's fair. Yeah, and I know folks are hoping that, nothing or not too much gets overturned if there's an administration change, but I think it's, for the benefit of everyone to have this policy in place and even more going forward. So hopefully we're correct on that assumption, hopefully. You and I effectively met like via Twitter, and then we were able, as you mentioned before, to join the board of a company together. That company being Bicky in our portfolio. I've definitely been able to see firsthand, what kind of sets apart Gutter from other firms working together, which has been great to see. But would love to get a sense for how you think about differentiation for Gutter, as founders, I'm sure, want to know, LPs want to know, and so how do you kind of position Gutter and differentiation that you're bringing to founders in your portfolio and elsewhere?
Yeah. So, I mean, I think like, my background, my partner James's background is important. Like we're first and foremost operators. We take a really concentrated approach to building our portfolio, which allows us to spend, a lot more time with pre-seed and seed stage companies than the average VC firm. We kind of balk at the idea that you need to have 40 positions in a portfolio, to have success in venture. And we actually think that that's, antithetical to actually creating value and having an edge. And so Vicky is a good example actually, because it predates the fund. And actually like the way I met Abhinav was through Rachel, who's the founder and CEO of Opus, who I was doing some coaching and advising after I left WeWork. And I met Abhinav, really kind of fell in love with him and the idea and sort of like his positioning in the market. As Abhinav's a really mission-driven guy. His mother-in-law owned an Indian restaurant, or several, I guess, in Midtown. And he kind of watched her lose her agency as a front of house hospitality entrepreneur to the platforms that were disintermediating her from her customers. And he was really building from that insight. And I think, the way I've engaged with him and with that company is pretty indicative of how we like to work. So we got involved really early. At the time, Abhinav's wife, Deepti, was his co-founder. They had an entirely outsourced engineering team in the Philippines. And we were able to partner really effectively. And I helped him to recruit two co-founders, John Lucas, who was an engineering manager at Managed by Q, who I'd worked with for many years, and Chris Thompson, who was our head of revenue at Managed by Q. And really, like, you've seen firsthand over the last year how getting the right team around the table and then really focusing on sort of the blocking and tackling of figuring out product market fit and then scaling customer acquisition has led them into a slightly different market with pretty remarkable results sort of in the last year of launching their enterprise CDP. And so I think like, the way we engage is one sort of very hands-on sort of coaching founder with an insight to become a CEO leading an organization. And then, my partner, Richard Hughes, ran talent for me at Managed by Q. And as you've seen, like he really drops in and recruits for the portfolio in a way that honestly nobody else in sort of the venture talent business does. And I know that because I've been on the other side of the table for most of my career.
No, that's super helpful. And I think Vicky's a great example of how you've all been able to be super helpful. I think, enabling a solo founder or semi-solo founder to be able to kind of bring on co-founding talent that's critical to succeeding is, the bar that it's a really high bar to set. And glad you guys have said that in terms of being able to kind of add value to a portfolio. And yeah, I agree. It's paying dividends. And, you mentioned, Richard, which I agree, he's been a great asset for you all. What I guess what caused you to want to bring someone on full time to kind of help the portfolio on the recruiting front?
Yeah, I mean, I think like when you think about what an early stage company is, it's basically, an insight, and then you have people and you have capital, and every venture firm can provide capital. I think ideally, our job as venture capitalists is identifying founders that have the right attributes and that are the keepers of the insight. That's sort of why I'm not a huge believer in the studio model of, someone building someone else's ideas. And then it's talent. And so I think, what I found starting to engage with these companies was the single biggest thing I could do is get the right people around the table. And often a founder with an insight doesn't have the network or resources or experience to recruit the team they need to achieve their goals. And so I think a lot of what Richard does and I've done is we sort of play this clearinghouse where, there are transactions in terms of like, talent joining a startup that just wouldn't happen in the wild. So you take someone like, John or Chris at Bicky or Vincent Jeff at Opus, and they're all kind of off the races building these amazing businesses. But I just think that it would be a tall order for someone who doesn't have experience building software to recruit more experienced operators to the table. And I think what we've been able to do is sort of play this intermediary where we say, our money's on the table, we're on the board, we're not going anywhere, and we're going to partner with you to build this company. And I think it helps that these are people that I have, in some cases close to a decade of miles on the road with, that there's this trust that like we're bringing them into a situation that we think really has high potential and is going to advance their career, is going to be, have tremendous financial upside for them and put them, side by side with a mission-driven founder building something that matters. And I think when we started out, it was pretty clear that that was going to be a big part of the edge. So we started Richard. He had been running talent at Primary Ventures and then was at Alma for a stint. And we started him just on a contract, and immediately he was just adding so much value. And, since then it's honestly like outperformed mine and James's expectation, the value that he brings as a partner to us. James and I also both pretty well, and Richard just has a totally different style of engaging, and he really is sort of like the soft touch of the firm. And that also creates a different level of relationship and trust with founders where he can work with them on talent problems, but they're not talking really to their, director or investor.
Yeah, no, I think that makes a ton of sense. And yeah, sometimes you need good cop and bad cop on a team. And so glad that you're able to kind of maneuver that between yourself, James, as well as Richard. And you mentioned, maybe a handful or so of your portfolio companies. And you mentioned also the focus on being concentrated. It'd be great to get a sense, what does concentration actually mean from a portfolio count for Gutter? How have you thought about portfolio construction as a firm, and why have you chosen that path that you've chosen?
Yeah. So I think like, I guess the first question in terms of like, what are the actual numbers? So fund one was a $25 million fund. There's 14 core positions in the fund, and our max position size, I believe, is like around 12% of the fund in a single name. And that's pretty much the strategy that we're going to be carrying forward into fund two. And I think, the way that we sort of arrived at that strategy is, it takes a ton of work to do the things that we do to cause inflection in a portfolio company. So it's not, there's only so many John Lucases and Chris Thompsons in the world that are kind of like willing to suit up and join these companies. And so it takes a lot of effort on our side to identify the right people, cultivate those relationships, successfully onboard them, and then really like work alongside founders to make sure that the business is hitting key milestones and then, doing the downstream capital raises. I think when you're really showing up and doing the work, more capacity becomes the limiting factor in the number of names in a portfolio. And, I experienced this raising from institutional LPs where everyone wants to tell you that it's a power law business. You need over 40 names in a portfolio. And I think my response is like, when someone tells you they have over 40 names in the portfolio and that they add value to their companies, like you should ask them which one is true, because it's just like, it's not possible, in my opinion, to do the amount of work that we want to do with the portfolio for that many companies. And so, the strategy in its essence is a coordinated set of activities that produce a desired outcome. Our strategy is to add value to companies. And if that's true, we knew we had to go concentrated. And we looked at our track record over 100 angel investments and what, James, my partner, is a computer scientist. What he found was, if you looked at any random grouping of investments, it was basically between 12 and 15. The variance dropped off significantly. And so we actually weren't seeing returns to diversification beyond 12 to 15 investments. And so that also happened to be sort of the intersection of our capacity as being really active directors for a 2-year period.
Got it. Got it. And on that last point of the analysis that I guess, James performed for you, that data set, was that like historical gutter investments, or, what was the data set that arrived to that data point you mentioned?
Yeah, so that was historical gutter investments. So James and I invested, starting in 2017, we invested as angels together, and we made over 100 investments before the fund. And so, certainly our selection criteria and process were not as advanced as they are now. But it was basically a way of looking at our previous activity and seeing if we had always been only doing 12 or 15 investments and randomly chose them, would our results be meaningfully different? And the answer was no. And then if you add to that, do we also think that we can, drive significant gains in IRR by actually focusing and going deep with a few companies? We do. And then it made it kind of have a strategic decision.
Yeah, that's fair. That's helpful context as well, and great data. Hopefully you guys share some of that math publicly as well if you haven't already. And yeah, and on your point around the power law and LP discussion, I think fortunately for you today, and hopefully going forward as well, there are plenty of LPs that want to see concentrated portfolios, and so hopefully you can add them to your roster over the next couple of years and months as well.
Yeah, I think it's changing, things go in and out of fashion, in everything, but in venture. And I definitely think that, when we started out, our strategy was a lot less popular than it is today. And it is funny. I mean, the institutional manager world way better than I do. But if you're an institutional manager and you have a dozen managers, it's like kind of confusing to me why they would want any individual manager to be that diversified, because they are themselves diversified.
Yeah, that's right. I mean, via your just GP set, you've got a ton of companies, and yes, you'll have some overlap because, we will invest in similar things, but at the end of the day, you're going to be in a large bucket of companies, and hopefully that's, large and diverse enough that you get the actual power law that you want to achieve with your own portfolio internally. And you mentioned, 15-ish kind of core investments is like ideal for gutter. Are there non-core investments? What does non-core mean from a strategy, perspective for gutter as well?
Yeah, so we did basically, when we did fund one, we used fund zero, which is the angel investments, as sort of like our feeder vehicle, and a lot of the deals came from there. And so when we started fund one, we had the concept of a non-core investment, which was sort of like a, supporting investment. We basically stopped doing those 1 quarter into deploying the fund. And so there's a handful of them that are kind of like positions that are not meaningful to fund returns. And we've stopped doing them entirely because we found that two things were true. One, I mean, you're just not ever going to do the same level of diligence on something you're not leading. And we didn't want to have, there's just way too much room for error there, by basically under diligencing an opportunity, or you're wasting your time to do all this diligence for a 100K investment. And then the second thing, which is really important to me, is there should only be one service level that a founder should expect from gutter. And it doesn't feel fair. And I had this experience as a founder to be putting 100, 250K into someone's company. And then when they say and so I get to use all the services, right? And we say oh, no, on our books, you're not a core investment. So figure it out on your own. That doesn't feel good. And that's just was a strategic decision. Again, strategy should constantly reinforce itself. And so our strategy is being the most active partner, like really bringing the cavalry on every opportunity. And so every founder in the market should be talking about the same experience with us.
Yeah, no, I agree completely. I think, you got to treat all your babies equally. Otherwise, anyone's end up with bad taste in their mouth, and that reverberates in the industry, and that's only going to be negative, not positive for anyone who's playing the game.
Yeah, for sure.
And you mentioned obviously Richard being a great asset for you all from like a portfolio support slash recruiting standpoint. Is there more you want to do there? Is there more you're already doing there?
Yeah. So, I mean, I think about it, I have the benefit of having been a founder CEO. I think about it as like, what are the tools in the toolbox? Like, what should it feel like to be a gutter founder? Like you reach for a tool and we put it in your hand. And so, other areas that, and I think a lot of firms support in this way. We've invested in PR to help kind of get the first press for our companies and get them kind of trained to know how to manage media. I think that's an important tool in the toolbox in terms of telling their story. We have a partner on the design side that helps with sort of like more of the brand design and creative agency that we partner with. And then we also have a few sort of ringer freelance product engineering design leaders that will engage on a contract basis. Actually, Gio and Magera, who work with Bicky, are folks that we've collaborated with repeatedly, and just kind of have some of these sort of people that are excellent and don't really want to join anywhere full time, but are also down to suit up on sort of like opportunities where we're collaborating, and that's worked really well for us. And then the last piece I would say is we have. I'm a big believer in coaching. I had an executive coach named Jeff Hunter who now runs a coaching practice called Talentism, and he really changed my life, changed my career. And so for the right opportunities, we'll engage Jeff's team. We also have a coach named Josh Levine, who's excellent, who works with us actually. Even in our diligence process, he supports us on founder assessments. And so we'll tag him in. I think he actually worked at Abhinav for a little bit. And so, those are other resources that also, they're just on the coaching side. It's like, well, we are in the role as the investor. And so, I, sort of self-aware that some of those coaching conversations are best had by a third party that's not us. And so we have a lot of those resources. But we do try to like, rather than have a directory of vendors, we want to have like a tight crew of repeat collaborators because then we all really know how to work well together.
Yeah, that makes a ton of sense there. And you mentioned this concept of a gutter founder. What is a gutter founder? Is Abhinav from Bicky a prototypical example of that, or what are the kinds of founders, I guess, that resonate best with you and James and Richard?
Yeah. So, I mean, I think there's like kind of two ways to look at it. One is like their kind of what has been their journey and their sort of experience profile and like, what's got them to the day. But then there's also like, what are their attributes? So I think, one of the things that we think about a lot is a deeply held insight from personal experience. I think in particular in investing in SaaS and marketplace, like a lot of the low hanging fruit has been picked. And so you really need to know the secret. And I don't think you know the secret if you, stand at a whiteboard and come up with ideas. I think that worked for Jeff Bezos. I don't think it will work as well today. And so, Abhinav is a great example where his founder story about his mother-in-law is really something that he only could have known if he was someone who had family in the business and had a deep love for that customer. You look at Rachel at Opus, who ran operations for Danny Meyer's restaurants, had a decade of experience working in kitchens in New York City, and realized that there was no learning management system that was mobile first and multilingual and actually mirrored the needs of today's workforce. We backed a company called Watts, which is vertical SaaS for waste management and waste diversion, founded by two amazing women who have a decade of experience as consultants helping large organizations manage their waste diversion programs. So I think that's like been a really good fit for us. Another one, Max at Tetra, who built $100 million revenue home energy assessment business and then decided there was a bigger opportunity to do a managed marketplace for high efficiency heating and cooling. So I think on the experience side, we like people that come from industry. They don't need to know how to build software. They don't need to have done it before. That's what we can help with. And then in terms of like our founder attributes, the three things that we really screen for are integrity, drive and decisiveness. And I think, Abhinav, well, is off the charts on the three of those, especially bringing John and Chris into the mix has just like amplified the decisiveness and the way they've, you know, I wouldn't say fully pivoted, but, advanced that business in the last year has required making a lot of hard and fast decisions. And yeah, so decisiveness is really key for us as well.
Yeah. No, and I think as you mentioned, Abhinav definitely embodies all those characteristics amongst the other founders you mentioned. So definitely understand, what makes a gutter founder at this point now as well. And, switching gears, I guess, for a second, you were an operator for the majority of your career prior to becoming an institutional venture fund manager. And I'd love to get, I guess, some learnings from being an operator that has helped you with gutter. And I said, institutional, manager, because I know that obviously you and James have been doing angel investing prior to it. That was, I guess, called Gutter Zero for quite a while. But, running a fund is quite different than, investing as an angel, even with someone else. And so it'd be great to see like, what's translated well or not well, or what are the learnings that you'd be able to take from the operator world to now the investing side of the equation.
Yeah, I mean, I think like probably a couple things, but the learnings for me all took take the form of like mistakes that we made at Managed by Q and things that like I don't want to repeat either for myself or for our founders, both because, they don't lead to the best outcomes and they're just like, painful to manage through. I would say like the first one is, business models are destiny. I think, at Managed by Q, we went through, uh, tech-enabled services to managed marketplace to SaaS. And I think we basically did the whole thing in the exact wrong order. And it ended up being very costly to do it that way. And you just create a lot of churn in the organization to be, fumbling your way through business models rather than having a point of view from the outset. I think the other thing, which I think most founders, I think it's really hard for people not to learn this the hard way, but nothing destroys a startup more than having too much money. You and I have talked about this, I feel like at length, but basically like I'm a big believer in, figuring out what is the minimum viable amount of funding to get to the next milestone and not raising more money than that. I think, the second you start adding, people who are not building the product or selling the product in the early days, you just end up with too many people for the CEO to talk to, that actually isn't creating value for the customer. And like, obviously later stage, you need a CFO and you need a head of people and you need like all these supporting functions. But in the early days, you know, and I don't mean this in a negative way. You hire these people, they're very talented. They want to have a say in the management of the company, but like you only have so many hours of the day and every hour you're talking to someone who's not building or selling the product, you're distracting yourself from what matters to the customer. And so I think the biggest thing, all of our companies are super lean, super focused, and yeah, more capital. I think in this environment today, what's going to be interesting is I actually don't think that companies get further between rounds by raising more money. We've talked about this. I think like, basically they end up covering the same ground they were going to cover. They just spend more money to do it. And so that's something that, we are pretty dogmatic about. And that just comes from the operating experience of like, spending too much time thinking about fancy hires and offices and all that stuff.
Yeah. No, capital constraints can be a great motivator for folks to like, figure things out the right way. So they don't have to fix it later on, as it says, obviously you've alluded to across a couple of those kind of snippets you've mentioned there. One thing I'd throw at actually in your bucket as well is I think just, that founder empathy stuff is like I've seen within our board mates. I think, being an emerging manager definitely possess it as well in some extent, but I think it's different when you're thinking about it from the operator startup side of the equation. And I think I've seen it come out in board meetings, and I'm sure it resonates as well with Abhinav as well as other founders that are in the Gutter portfolio.
Yeah, I think that's definitely true. I guess the other thing also is like, as we, a company, you know, I think there is a lot of weight is put on the founders as sort of these like deities, but having been one, it's like it's everybody else who actually, in the early days that actually makes the company work. And so I also think I am a lot more flexible about, bringing in people slightly later on as co-founders and giving them outsized equity because we know that these are like 10-year journeys if they work and getting much more important to get the right people in with the right incentives than we have them have been there at the first day of inception, if that makes sense.
Yeah, no, I agree. And I think people probably overestimate how costly that experiment or attempt can be, but eh, vesting terms are there for a reason, and you've got plenty of
Totally.
time to figure out if things are working or not. And so I think people overestimate how costly those things are, and they can be pulled back. It's not very easy or not painful, but they can be done, and you can move on and hopefully try again effectively. Um, and I guess, you alluded to like, you think more folks are resonating with the I guess concentration focus of I guess both equal and gutter. You know, how else do you see venture evolving over the next couple of years? I think, us emerging mares have like a lens that we think things will change a bunch. They probably will change slower than we think they will, but love to kind of get a sense for how you think things evolve in our industry over the next, call it 5 or 10 years.
Yeah, I mean, I think the concentration, there's a lot that kind of comes with concentration. It's like concentration is an expression of confidence in your ability to pick, your ability to add value, and your kind of willingness to stick to your guns on your bets. Like diversification is always a hedge, and so I think there's a lot that goes into that kind of like cultural shift, which is like with that, I think you end up seeing a lot of the kind of spray and pray managers wash out because, basically it's the opposite of everything I just said. And I'm sure there's some role in an ecosystem for them, but if I was an institutional LP, um, you know, I'm not sure what the value to me is someone who's going to bring me their 100 best ideas versus stand by their 10 or 15. Um, so I think that's like, likely to continue. And then I think at like, pre-seed and seed in particular, and this is obviously talking our own book, but like, I just think it's, the bar is going to continue to go up for value add and like really having sort of like clear, tangible examples of like why there's just like the world is still awash in capital. And I think for the best founders, like the burden of proof is on us to demonstrate to them why we're the right partner. Um, and I I think that brand name funds will have trouble competing in the way that people like you and I do when it's like, it's not quite our name on the door, but it's close enough to it. And, this is our only focus. We don't have 10 other funds with different mandates. And, like uh, this is our entire life and livelihood and focus. And as a result, like we both fucking hustle for it.
Yeah, we definitely are working hard and hopefully we reap the rewards someday in the future. And I guess the thing I'll throw out there is I do think there are multiple ways to win the game. And so I think like I definitely have seen folks that, are far less concentrated than we are at Equal have great success on the investing side as well. And so I think that's one of the views I think of ventures that there's just, I won't say infinite, but plenty of different ways to win. And I like seeing folks take their different approaches and styles, particularly because I think when we come into a particular company, we think we can be helpful in certain ways. We know we cannot in other ways. And so having folks that are able to kind of bring different things to the table, I think is also a positive for anyone's cap table. And ultimately, whoever can be as most helpful as possible to the company succeeding, I'm all for as well.
Yeah, I think that's true when you have a really specialized focus. I think that's like an omission on my part. I think that's like totally fair. I think, yeah, if there are sort of a strategic kind of niche value add, I think it can make sense because they're playing a different game. If you are a transportation specialist and your LPs are all transportation companies and like, you're hired to go out and find the best transportation companies and have a real way to add value to them, I think that makes a lot of sense. I think a generalist doing a spray and pray approach, it would just be hard for me to ever advocate to one of our companies that they should create allocation for someone that, you know, is effectively not bringing anything to the table. And I think that is often the case of like, generalist funds with highly, highly diversified portfolios because there's just like, there's only so many hours in the day.
It's fair. Yeah, that's fair. And it'd be great to switch gears a second here and just think through, you and James. Definitely both operas, but different pathways to doing so. It'd be great to get a sense of like, there are definitely obviously ways when you're similar, but how are you different in how you approach investing as well?
Yeah. So I think like, James and I have the benefit of having been best friends since, we were like, I think that was like 19 and he was 20. We met on the rugby field at Johns Hopkins. James was doing his master's in computer science, the concentration in machine learning. I was doing my undergrad. And so we've known each other through every chapter of life. When he started a startup, I did the product and design work for him. When I started Managed by Q, he wrote the first version of the software to schedule our cleaning supervisors. And so it's just been like a really tight collaboration over many years. I would say like sort of our archetypes, like I'm the builder and an operator. Like I have a lot of gas in the tank and a lot of energy, but I'm not always analytical about, where to focus that energy as James is. And James is like a total analyst. He's the smartest person I've ever met. I'm like, I'm sure you have this with your partner. It's like, it's a total gift to be constantly impressed by the person who is your partner in terms of just like raw horsepower. And so James's value add is sort of much more on the analytical side. If you look at some of the stuff we've published over the last year, his predictions around what interest rates meant for housing were ahead of the entire market. His piece on sort of predicting this recession that never came was like way ahead the rest of the market when everybody else was just panicking. And James he's really smart, but he also is incredibly courageous in his ability to be completely independent in his views and do fundamental research and then be willing to actually like, share what his conclusions are. And I would say, not to disparage myself, but absent James, I'm much more likely to sway in the breeze, as he would say. And like James just like that's not a mode that he has. And so it's been really helpful to me to, to think from first principles. And then where I compliment him is like a lot of the soft stuff. So, James was a founder of a company that failed, and my company, I was the CEO, but for 5 years, we had thousands of employees, and I managed like large groups at WeWork after it sold. And so I just have different operating experience. And as a result, have different sort of managerial instincts when it comes to dealing with founders or advising founders on certain situations.
Yeah. Yeah, no, and I agree completely with that dichotomy you mentioned. I think Rick's probably my James over here at Equal, and so definitely understand that setup and how it can work as well. And one thing I guess you did mention is that James had been a professional poker player as well, and so I guess two questions there. One, what do you think that brings to the table, and two, what do you guys think about like people call them, I guess, like vice categories, but things around gambling, other categories, are those off limits for gutter? Do you find them attractive? Be great to get a sense, where if that does or doesn't fit within the gutter philosophy as well.
Yeah. So James, I completely skipped over this. So when James's startup was failing, he started playing poker on the internet to support himself. And he saw an opportunity to play daily fantasy sports with a level of sophistication that just hadn't been done before. So he had a research organization of 5 people creating proprietary data sets, and he built software that helped him to predict athletes' performance, predict his opponent's behavior, and ultimately size bets. And you can kind of guess how those things would have some relation to venture, although not entirely. I like to say the difference is like we get to get on the field and kick the ball around, or at least shout at the players. But yeah, James, he was one of the highest grossing players in the history of DFS. That's what gave us the bankroll to start investing together as angels. And so, I would say there's some clear lines from like the analytical work and kind of dispassionate analysis of probabilities of outcomes and then sizing bets accordingly. I would say like one of the biggest surprises to me about myself was that James pointed out early in our running Fund One together full time was that, I think of myself as being very excitable and like a cheerleader for things I'm excited about. And James is like, you're consistently underbetting your confidence. Like if you're actually this confident and all these things are true, you need to bet bigger. And so like he pushed us into going more concentrated and taking bigger swings. And so, yeah, the gambling stuff, and he's written a really great piece about this, but yeah, I think, arriving at sort of what you think the world looks like and what's going to happen, and then being willing to bet on that and not be sort of like afraid of what it's going to look like if you're wrong. Like you have to be willing to be foolish to make money in this business or in any other one. I think I learned that a lot from James. In terms of like vice categories, yeah, because of James's background, we get every sports betting, whatever, gaming, gambling, deal under the sun sent to us, and they're just not for us. Like other people, can and should do very well there. But I think, what was really important to me in particular, and like James, we had this happy accident where I left WeWork at the end of 2019 and COVID happened and the NBA shut down and James couldn't play anymore. And it caused James to introspect a lot on how he was spending his life and his productive energy. and realized also that, in gambling, he was taking money from people at times he couldn't afford to lose it. And like we would tell himself a story about who those people were. That probably wasn't true. And so with Gutter, we both decided we want to make this something that we're proud of as our legacy and that we have the energy to build for the rest of our lives. And so mission driven companies and thinking in every deal, we ask ourselves who benefits. And so, it's really important to us that that's sort of part of each investment we make because, that's going to tie directly to how motivated are we to get out of bed every day and go fight for these founders.
Yep. That's awesome context. I appreciate you sharing those stories. Last question on that front, I guess. Does James still play DFS?
He does not. I think he has like a group of people that ask him for his feedback on sort of their process. Every now and then he was like, it's a world I know nothing about, but James was like, a bit of a celebrity in it. So I think he is generous with his time and advice and has some folks that he maintains contact with there, but he does not play himself anymore.
Fair enough. Fair enough. And then I'll go switch gears just completely here off of venture, off of operating, et cetera, perhaps. But I saw online that, you once worked as a community organizer for Aaron Brockovich. What can you share about that experience, any learnings it may have, or just some fun anecdotes?
Yeah, I mean, it was a cool experience. So I was a paralegal at a law firm called Whites and Luxembourg, and they, at the time that I joined, they had been assigned to the plaintiffs' steering committee of the big BP Gulf oil spill, and as a result, we're building an environmental practice. And so Aaron was retained by the firm to help organize communities who had been impacted by some sort of corporate pollution, similar to her case in Hinkley. And so I had the opportunity to do a handful of investigations with Erin, traveled with her, I would say most notably to Duncan, Oklahoma, where there was a groundwater contamination case. And yeah, I mean, it was like, it was really interesting work. I think the biggest learning for me is these cases take so long because, that case is probably still being settled out that I realized that even though like the impact was inspiring, it just wasn't how I wanted to spend my life or my career. And also like, some of the stuff that we looked into, for example, with regards to fracking, where the facts were all specific to each well pad site, and there was just actually no way for a case to be economically viable for the firm to take on, even though, there were pretty clearly people being poisoned. Like that was also pretty dispiriting because at the end of the day, it's a business and they have to be able to make money to successfully pursue a case. So yeah, it was a really great experience. I think like part of the reason I ended up shifting into startups in the early 2010-ish, was I had friends that were, working in startups. You could write software and, immediately around the world, it would change people's lives. It could change your life. And that was just like the pace that I was became addicted to and like really excited about. And, prior to working at the law firm, I worked as a community organizer and in local politics in Baltimore and sort of had the same friction with the political system. And, I think we've all seen it's only gotten worse. And so I think I am really grateful to have found an avenue of impact through entrepreneurship, personally, and then building companies alongside mission-driven founders.
Yeah. No, I think like, the impact that is important to the mission for Gutter is also, I think, paramount and visible in the Dan Teran personal life as well. I also saw that you are on the board of Pursuit, which, is a nonprofit that helps diverse and low income individuals in New York City break into the kind of tech world as a means of career transition and shift. And so it'd be great just to kind of speak more about the work that organization does and the impact it has on, even our community.
Yeah. I mean, Pursuit is, anyone who knows me well will know that I won't shut up about it. It's an unbelievable organization. The impact they have, the average, incoming student is making 18 grand a year ish. Like they are cleaning homes, cleaning offices, flipping burgers, kind of you name it. And, for one reason or another, they have not been sort of included in sort of the mainstream educational system that produces software engineers. And so they're not training them to do IT. They're not training them to do, lesser tasks. This is like, let's take someone from a basis of, effectively zero in terms of like the skill for which they're being compensated for their work. And within a year, They're getting jobs as software engineers with the average starting salary now of, I believe, $90,000 a year. And I've seen people go through that program, and years later, they are engineering managers at Pinterest, at Uber, at Thumbtack. We have an amazing partnership with Uber where they're hiring, I believe, 10 people a year out of Pursuit. Same thing with Citibank. Um, I got involved, I guess, 6+ years ago now, because I was tired of hearing people talk about the pipeline problem. Oh, no one can hire Black engineers because it's a pipeline problem. Like, if that's true, then I just felt like I needed to put my money where my mouth was and try and solve it. And so we actually at Managed by Q helped them create the employer partnership program, where we had a woman who was an office cleaner who went through the program, came back as a software engineer. Blue Apron at the time did the same thing with a woman who worked in one of their factories. And yeah, it's a really special organization. And UK, the founder there, is a really remarkable guy. And, I think I'm very bullish on the outcome they produced. They also now have raised their first ever impact bond, which is basically the program is paid back through an income sharing agreement. And they're demonstrating that, there could be a massive market for this sort of impact bond where you're returning 6-7%, and also creating these life-changing employment outcomes. And USV have been very supportive there. And yeah, my great hope would be that Pursuit or an organization like it just becomes part of the fabric of how we as venture capitalists, we as founders, we as CEOs, just like stop pointing at the problem and start solving it.
Yeah, no, man, that's amazing impact that Pursuit's creating, and hopefully that can continue to scale over time. And I guess selfish. I hope there's a point where we actually don't need orgs like Pursuit, but we're running them for a long time, and so I'm glad they exist, and hope that impact continues to kind of come to fruition. And I guess on that point, obviously, impact, and this will probably be the last question. I know I've taken a bunch of your time, Dan, so I appreciate it. But impact has been a recurring theme across our session here today. It's important to the fabric of Gutter. What excites you most about the impact that the Gutter portfolio will have over time?
I mean, I think we're taking very specific opinionated bets on solving major systemic issues. Like housing affordability being one, economic mobility being another. And I think if you take a company like Forerunner, they were visiting a client in rural New Orleans where, I think it's something like 20% of the people below the poverty line, 10% of people speak French at home. The communities that most people don't even imagine exist in this country. And they tell them that, without their product, they would have lost hope in being able to rebuild after a flood event because they didn't understand the property specific risk. And so, thinking about building companies like this that become part of the fabric of, the world that we live in, that we've inherited, that we will pass on to the next generation. I think there's a real chance that the companies we build can move the needle on some of these large systemic issues. And that's something that, James and I would be really proud to have as our legacy.
Awesome. Terrific. And Dan, thank you so much for giving us time and some insights into just how Gutter operates internally as well as externally. And looking forward to doing hopefully some more deals with you. Thanks a bunch, Dan.
Yeah, man. Likewise. And thanks so much for having me on. This is fun.
Awesome.